U.S. stocks are on the rise as President Donald Trump makes bold policy announcements in his second term. Today, we'll explore what's driving this market momentum, the new tariff plans, and what it could mean for the economy and investors like you. On Tuesday, the Dow Jones Industrial Average climbed over 420 points, gaining about 1%. The S&P 500 was up 0.76%, and the Nasdaq added 0.56%. This rally comes as markets digest President Trump's announcement of a 25% tariff on Mexico and Canada, set to begin February 1st. Interestingly, there are no new tariffs on China, though Trump mentioned that the tariffs from his first term remain in place. He also hinted at possible action against China if no deal is reached on TikTok, which remains under scrutiny for national security concerns. Experts are weighing in on these developments. Market analysts believe the economy is showing resilience despite the potential challenges posed by new tariffs. UBS Global Wealth Management, for instance, predicts the S&P 500 could reach 6,600 by December 2025. That's an optimistic outlook, even with some uncertainty in the mix. However, analysts caution that the road ahead may be bumpy. Trade policies, inflation expectations, and fiscal decisions are likely to introduce market volatility, but strong earnings growth and lower borrowing costs could provide a cushion for the markets. Let's take a closer look at the sectors reacting to these policy moves. In the energy sector, oil prices dropped 1.7% after Trump signed executive orders to expand U.S. drilling. This could lead to a shift in the energy market dynamics, with a focus on domestic production. In the corporate world, Charles Schwab reported a strong earnings performance, pushing its stock up by 3%. Meanwhile, Apple faced a 4% drop after analysts downgraded the stock. These mixed reactions highlight the varied impact of market trends on different sectors. So, how are investors feeling? Sentiment has improved as shown by the VIX, Wall Street's fear gauge, which dropped 5% on Tuesday. While fears of inflation and fiscal challenges persist, optimism is building around the economy's ability to adapt. Despite these risks, many experts believe the U.S. economy has the momentum to continue growing. Factors like strong corporate earnings, resilient consumer spending, and favorable borrowing conditions are likely to support market growth. So what does this mean for investors like you? Here are the key points. 1. Keep an eye on how tariffs impact trade relationships, especially with Mexico, Canada, and China. 2. Focus on sectors that stand to benefit from Trump's policy changes, like energy and finance. And 3. Stay diversified to manage risks associated with potential market volatility. The key takeaway? The market is showing resilience, but staying informed and flexible is more important than ever. Thanks for tuning in. If you found this analysis helpful, don't forget to like, share, and subscribe for more updates on market trends and economic insights. Drop your thoughts in the comments. Do you think the stock market can sustain this rally? See you next time. Stay informed, stay ahead.